Time for the first keynote speech of the day. I would like to invite Dr. Ghulam Mohammad Abbasi, who is the Director, Center of Islamic Banking, State Bank of Pakistan, to kindly join us and start his speech.
Bismillahir Rahmanir Rahim. Honorable Dr. Sajid Mahmood Shahzad, Vice Chancellor of the Minhaj University, Lahore. Umar Mustafa Ansari, Secretary General of the IOFI. And I will especially thank Dr. Muhammad Isaac Bhatti for giving a very comprehensive brief of the conference. Distinguished guests, local and international scholars and industry professionals, ladies and gentlemen, Assalamu alaikum. It gives me immense pleasure as I join you all in this fourth World Islamic Economics and Finance Conference being held virtually. On behalf of the State Bank of Pakistan, let me extend special appreciation to the organization organizing this conference, the Minhaj University, Lahore. They brought in here a diverse array of these stakeholders, both locally as well as from the various parts of the globe, and with distinguished representation from the academia, professionals, Islamic bankers, and the Sharia scholars together. And continuing with its past tradition to promote quality dialogue and research in the field of Islamic economics and finance, Minhaj University Lahore has, I believe, under the current circumstances, most aptly selected a very relevant theme for this year's conference. In an increasingly globalized and turbulent economic and financial landscape, such international conferences, through exchange of ideas and thoughts by high-profile researchers, scholars, practitioners, provide us with valuable insights regarding the true nature of the current challenges faced and the possible ways and means of effectively, innovatively meeting our mutually desired objectives. Ladies and gentlemen, Islamic finance entails the element of development of real economy, social justice, transparency, equity, and property rights, prohibition of speculative behavior and excessive uncertainty, as we all know, are the main attributes of the Islamic finance. And deep-rooted in the Sharia principles, Islamic financial system's unique characteristic of being the asset-backed lend its prudence and stability. The system therefore enjoys a competitive edge over its conventional counterparts because of inherent ability to bring into fruition a more broad-based sustainable growth and development. It is quite reassuring to note that over the last 4 decades, Islamic finance industry has on a consistent basis witnessed a healthy rate of growth. According to Islamic Financial Services Board, probably you all must have gone through those who are the researchers and the scholars here. That's in the last IFSP stability report, the overall Islamic finance industry have touched around 2.4 trillion US dollar. While accounting for a smaller share of global financial assets, Islamic banking has established its presence in more than 70 countries. While in 13 jurisdictions, it is basically systematically important. When you say it's more systematically important, we mean that the market share of assets on the deposits of that particular jurisdiction is over 15%. So those jurisdictions are around 13 to 15 jurisdictions, which basically have got the market share of greater than 15%. So all those jurisdictions are systemically important, and Pakistan is one of them. As of the latest December calendar year and latest data, we have touched upon 18.3% in terms of the deposits, while in terms of the assets, we are around 17%. So it's during the last quarter, there's a huge increase in the Islamic finance asset side as well as on the liability side. The scope and range of the Islamic finance product has also grown manifold. That's now They can meet the requirement of the borrowers, whether it's agriculture, SME, or the corporate or the consumer clients. And much progress has taken place, not only in the local international level in the Islamic financial markets, on the Sharia governance side, on accounting and Sharia standard side, as well as simultaneously on the regulatory front. And now the different jurisdictions are moving towards the liquidation frameworks, the resolution frameworks, LOR facilities, and things like that, where there are specific those areas where there's a need for more research and more work to be done. Ladies and gentlemen, the world in the year 20, as we all know, is really an unprecedented health crisis caused by the COVID, and nobody knows that how long it will take more time to end. And thousands of us, we are here live today, and we don't know how many of us will left us. And because it's still unclear, and several of the countries across the globe, it's continue and creating damages not to the human life and the economy. To counter its negative economic and financial effects, the different governments and the central banks come up with the different strategies. And the State Bank of Pakistan have also took very timely action. And starting from injecting into the liquidity into the market, and decreasing the interest rate, which is unprecedented. And around 625 basis point interest rate was declined between March to September. While simultaneously, we have also deferred the principal amount, which is equally applicable to both the conventional and the Islamic banks. It was voluntarily, and around 625 billion rupees was deferred in terms of the principal amount of the borrowers, which created a cushion for the banking industry. Simultaneously, around 255 rupees of the loans have been restructured. And then we come up with facilitating our industry and the public at large, starting with because it's a health crisis. So we come up with the refinance facility, which also simultaneously also launched for the Islamic banking industry, where we provided liquidity, cheaper liquidity at 0% to the banks, and the banks on-lend that liquidity to the healthcare facilities, the people who are manufacturing the ventilators, the people who are the developing or kind of constructing the separate wards for the COVID patients, for the ample availability of the oxygen and the required protective cares and beds. So that facility have been provided a much relief to the healthcare sector. And most of the banks even provided that facility to very thin margin. And even few went up to the 0%. I know few of the cases in the few of the banks, including Mizan Bank, that they offered that facility even at the 0% to the hospitals without retaining any margin for them. And simultaneously, we have also, because during that pandemic, of course, the protection of the jobs of the people was also at risk. So another facility was launched, and the total outstanding is around more than 230 billion rupees, where we provided liquidity to the banks at a cheaper rate, and then very thin margin, they on-lend it to the SMEs and the corporates. And the most of the bulk of the borrowers, more than 50%, were the SMEs. And then that also protected the jobs of the millions of the people. And the amount and the finance we provided to the banks, actually, one of the requirements of that financing facility was that that amount has to lend to the individual accounts of the individual employee. So there was no misuse of that facility, which is not possible. And the borrower has to undertake that they will not lay off the employee for the 6 months time due to the tenor of the loan. So it's basically millions of people have got the benefit, and the corporates which obtained the cheaper liquidity, they didn't lay off their employees during this first and the second wave. Considering that Islamic finance model is, of course, it's a different model. It's from the conventional, and it's primarily based on the different contracts. So we provided a timely input to the Islamic banking industry that when they use these facilities, when they restructure their loans, then they have to take care of about the Sharia principle. So our Sharia advisory committee met frequently during that time and provided guidance and issued a circular that how to deal with different how to deal in different cases. Say for example, you are an ijara contract, or you are on a murabaha contract, that because price you cannot reprice. So how to, what's the way out for dealing with such borrowers under the pandemic, so that all the new contracts or the revision or restructuring of the loans took place under the Sharia compliant manner. So we provided that guidelines to the industry as well, which was globally also appreciated and a unique one. The third one, facility, because when we are under the crisis on the economic front, there is a need to also encourage the investors who are shy away due to the new for the new investment because of the COVID. So we provided a TURF facility, which called the temporary economic refinance facility. So Islamic version of that, basically, it's also a cheaper facility for a greenfield projects as well as the BMO facility. So that is basically a new industrialization in the country under the COVID. It's quite unique, and more than 300 billion rupees have been approved by the banks, and the LCs are being open. And there's a requirement that is by March, all the LCs have to be open. So this is the one, a flagship kind of and unique kind of a refinance facility, which under COVID, the people who have postponed their investment decisions, they took their decision because of the availability of a long-term 10-year fixed rate, cheaper liquidity available at just like 2% or 3%, because we provided the banks at 1%, and the end user rate, though it remained 5%. But most of the banks, because of the good large corporate clients, they provided at 2%, 3%, 4%, depending upon the risk on the end user, because the risk is on the bank side. So this is basically a very timely decision which encouraged the industrialization after several years in our country. Ladies and gentlemen, the financial industry is experiencing rapid transformation, which has been driven, among other factors, by game-changing technologies developments. And under COVID, I think you all know that it is very important, and it played a very pivotal role. In this scenario, the consumers of the financial services industry are increasingly showing preference towards element of efficiency, speed, transparency, and convenience. Fintechs and the big techs are rapidly entering the market, capturing the share of traditional players in the banking business by offering them stiff competition. These institutions have capacity to effectively and efficiently serve both the unserved and underserved sectors, and hence contribute to the overall digital ecosystem and broader economic development. The Islamic financial services industry, as we all know, that particularly when I talk about the local Pakistan environment, it's a step back in terms of vis-a-vis the conventional bank. But over the last 4 or 5 years, with our comprehensive enabling legal and regulatory framework, they have now started matching up with the conventional banking industry. Because otherwise, if the Islamic finance industry can't compete in terms of the technology, then it is basically the game of the future, that is to capture the market. Because without innovation in the technology and adopting the new technology, Islamic financial industry can't compete. So digitalization is very important to maintain the healthy growth rate experienced by the Islamic banking industry, particularly during the last 4 decades. As I talk about the Pakistan, there's more than 25% growth rate, accumulated compound annual growth rate during the last decade. In this regard, the use of state-of-the-art technology by Islamic banking institution will enable them to have access to more granular data about the customer preferences, which will improve the quality of input required in their business decision making and the benefits of the digital financial services, particularly for financial inclusion via the payment services and financing are also very well observed, and the potential of increased digitalization to improve access to Islamic financing by the micro and SMEs and the agriculture sector. Because these are the sectors where the Islamic banking industry, I've observed, are at the back foot, and current market share of these, because these three sectors, that is agriculture, microfinance, and the SMEs, they are very closely, because the real sectors, so very closely linked with Islamic finance. But unfortunately, the banking, Islamic banking inroads into these sectors remain lackluster, and we are now started giving them indicative targets so that the Islamic finance industry can move towards these priority sectors. And the State Bank of Pakistan has already categorized these sectors as the most priority sectors. Furthermore, the problem of the lack of required level of financial inclusion due to the FAT sensitivity can also be more easily and effectively mitigated through making the Islamic banking system more accessible to the unbanked rural population. Here is the role where the digital payment system can play its pivotal role. So it is therefore high time for the Islamic banking industry to capitalize on the opportunities offered by the digital platform through adoption of the innovative technologies without compromising on the compliance with the Sharia principles, while bringing with it the above cited benefit, which I have just explained. Digitalization also carries a risk, as we all know. That is a large risk of the cybersecurity, data quality, and also data protection risks. And coupled with that, there are also the AML CFT risk as well. So more importantly, in view of the distinct nature of the Islamic finance transaction, so there is an additional critical risk here. Coupled with that, of course, the Sharia non-compliance risks are there when we increase our transaction in the technology platforms. So in order to have a comprehensive framework available for the Sharia compliance and the Sharia standards. Ladies and gentlemen, owing to the environmental, social, and ethical consideration, the relevant stakeholders globally has lately been turning towards socially responsible finance, ethical finance, and investments. This concept encourages development and growth without compromising on the just use of natural resources in a sustainable manner, so as to ensure their equitable distribution to all current and future generation, and by causing no harm to the ecosystem. It is therefore effectively contributes towards the achievement of the global espoused sustainable development goals. As probably many of you are aware of it, that is Pakistan also is one of the country where we have adopted resolution in 2016 in the National Assembly for adoption of the SDG goals of 2030. And with the adoption, that because all these SDGs, which are linked with the hunger, poverty alleviation, green finance, so all the sustainable finance and the social finance, it will give a kind of a boost to the industry. And I'm happy to share with you that several of the banks are also in process of, they are basically in process of signing the PRB, Principle of Responsible Banking, with the United Nations. So the UK IFC is collaborating very actively with us in this regard. Ladies and gentlemen, now I will like to just highlight about our Pakistan's perspective, that is journey of the Islamic banking of the Pakistan, as because we all know that as per the constitution, the elimination of riba is an important objective of the state policy. And we have started our journeys in 80s and 90s, and it basically provided a kind of a platform, a Sharia contract, standardized Sharia contracts and the Sharia rulings available at that time, and that benefited not only the Pakistan, but globally many of the Muslim countries have got the benefit out of those initial research work that we did in 80s and 90s. And then the Islamic banking that was relaunched as a parallel to the conventional banking in 2001 and 2002 by giving a license to Mizan Islamic Bank. And then from that point, the Central Bank of Pakistan played a very pivotal role in promotion and development of Islamic banking industry. As a result of which I just share with you that we have touched around 18.3% in terms of the deposit, the market share of the deposit. Now, we are going towards, because under the National Financial Inclusion Strategy, which is approved by the government, we have to reach out to 25% by 23. And we are also targeting a higher percentage by 25. So in the look at the journey, that is initial 15 years from 2001 to 2015, we have just reached out to the 8 or 9 or 10%. But now we are touching around 20% or 18%, we are just crossed. The point which I wanted to just to share with you is that it is the infrastructure, the underlying infrastructure, legal and regulatory framework, Sharia governance framework available, because in the 80s we failed because of that, because the underlying infrastructure was not there. Currently, alhamdulillah, we have got the comprehensive regulatory framework available for the Islamic banking industry. Coupled with that, a Sharia governance framework is also there, starting with the Sharia Advisory Committee of the State Bank of Pakistan. Then we have got the Sharia board at each and every Islamic bank. Then we have got the internal Sharia audit, external Sharia audit, and a unique Sharia inspection, on-site inspection by the central bank, which many of the jurisdiction is not there. So couple is a whole framework is there. So there are roles and responsibilities of the Sharia board, the board of directors of the bank, Sharia compliance department, Sharia internal audit department, and that basically help the industry in ensuring Sharia compliance and give confidence to the people who invest in the Islamic banking here in the country. So this is very important and critical. And if you have gone through during the last couple of years, that is, we have issued several instructions. We have issued guidelines for the bank to how to convert completely from conventional to the Islamic. And the Faisal Bank is one of the bank which have almost I'm expecting just a year or two to be completely Islamic. So we would be having 6 full-fledged Islamic banks and the 16 conventional banks. Others, if we turn these Faisal to the Islamic, then we have 16 left, which have got the window operations. And many of them are very active and looking after for establishing the subsidiary, coming up with the Islamic banking subsidiary. A few of them are also working on the subsidiary model as well. So with these achievements, we have also been recognized globally as well. And probably you know that recently we have been awarded by IF and Malaysia as the best central bank for promotion of the Islamic banking. And during the last 6 years, we won that award 4 times. And this time, the press release of the IFN says that it was around more than 26,000 votes, and we won it by a gross majority of 2/3 votes. So it is again a kind of accomplishment, and which isn't possible without the support of all the researchers here, all the Sharia scholars present here, or the practitioners here, and all the Islamic bankers present here. Ladies and gentlemen, now I will, in the end, I will just move on to the role played by the international standard setting bodies. The IOFI, Honorable Secretary General is also with us today. And we are basically harmonizing our Sharia own rulings and standard with that of the global standard of the Sharia standard of the IOFI. And we are gradually adopting those standards. And where those standards have not been adopted, then basically we have advised banks to that they use their guidelines basically until we adopt them. And most of the banking related IOFI Sharia standard, we have also adopted that. Another issue with the Islamic banking industry globally, there's a challenge they say is the liquidity management. Different jurisdictions have catered that challenge differently. In our jurisdiction, we have now, after several years, I may suggest that there was, because not the kind of a regular issuance of sukuk programs, it was a bit delays were there, but alhamdulillah, we now have a very since last few years, the regular issuance of sukuks available, and currently there are around 1.2 trillion sukuk outstanding, and 64% of those are issued by the government of Pakistan. There is an enabling regulatory frameworks on the sukuk issuance provided by our Securities and Exchange Commission, and so that it's kind of a level playing field for the issuance of the conventional securities vis-a-vis the Islamic banking, Sharia compliant security. Despite the positive development experienced by all this Islamic banking industry, I personally believe there's no space for us to be complacent, because there are a lot of challenges still. In order to capitalize further on the success achieved so far, I urge upon the industry players and all the related stakeholders present here to reflect and be innovative in exploring the new avenues and opportunities that will also create greater value for the economy at large by unlocking its true potential. From a regulator's perspective, I would say that keeping in view the evolving nature of the industry and the ever-changing landscape of the financial markets and economic realities, both locally and abroad, a continuous review of the legal and regulatory and supervisory framework in coordination with the market player is imperative. And in order to gain a firm ground in international financial markets, policymakers, regulators, industry players, and the researchers need to work together to address a range of issues in Islamic banking and finance in an unbiased and an objective manner. And one of the most critical challenge we face, I think, is globally present there in the Muslim world, and wherever, even in the non-Muslim jurisdiction where Islamic banking is being operative, is there's prevalence of the misconception. People talk about that is, and there's a critique that you are replicating the conventional banking products through the financial re-engineering. This issue needs to be resolved now, and I think the industry players present here in large number, they of course we are working at the awareness level, at the capacity building level, coming up with the innovation, coming up with the technology solutions. But I think there's a greater need for working on the actual profit and loss sharing based products that basically the true spirit of the Islamic finance. I think there's a need for the pilots at the bank side. There's a need for the research institution at the university level to coming up with the products on the purely musharaka and mudaraba basis, which is a true risk sharing. So on that side, the industry is now working along with us, but there's a need for more focus on such areas so that the criticism of having only a debt-based instruments, thou allowed by the Sharia, with the certain limitation, because of course no jurisdiction is allowing Islamic finance without having the Sharia approvals. So whatever the Sharia products available with the banking industry, they are with the approval of the proper guidance from the Sharia. Ladies and gentlemen, meaningful progress in realizing the true potential that the Islamic financial system embodies requires a sustained efforts on all these stakeholders. And at this juncture, particularly under the COVID, Islamic finance also it's a critical responsibility that has to be collectively shared by the industry and other stakeholders, because under COVID, people are now asking at the different forum. Probably you must have been having such questions in front of you, that how Islamic finance is resilient, and how you compare it, that it is more resilient than the conventional industry. So there is a need now, because we have not reached to the exit strategy. The exit strategy would be very much careful, and because now the point of discussion among the central banks is to when to exit, and and how to exit. That is all the relaxation which we provided to the industry. And then there is a comparison between conventional Islamic finance industry. As we talk about the financial crisis, the global financial crisis of 2007 and 8, at that time we have proved that Islamic financial industry has proven at that time that it has uphold its kind of due to its peculiar nature vis-a-vis the conventional industry. But now is the time that we have to prove ourselves, and I think that the researchers present here from across the globe, they can research and work on the resilience of the Islamic finance during COVID, and how it have got an edge over the conventional industry, coming up with the papers and coming up with the objective evidence. It will also contribute towards the growth of Islamic finance. I think it will play a very pivotal role. So in the end, I would like to once again congratulate the Minhaj University Lahore for successfully holding this fourth World Islamic Economics and Finance Conference, and thank them for providing me an opportunity of addressing this august gathering of thousands of people across the globe and from our own country, which is attractive the Islamic finance industry practitioners, scholars, experts from across the globe. On that note, I wish everyone productive and proceeding ahead. Thank you very much.